So, you're looking to buy a home, or maybe you're just wanting to learn more about where to even start. Well, stick around. We got you covered in the Steps to Homeownership series. What steps should you take before you actually buy a house? The first thing you want to do is talk to your local loan officer, aka my team, to determine if you should move forward with a pre-qualification or a pre-approval. But what does that even mean? Let's break it down. To get pre-qualified, you start by answering some basic questions about your income and debt status. This will give your loan officer a general idea of where your buying power is. Pre-approval is a little bit different. Pre-approval also verifies your income and debt status, but in addition to that, it takes into consideration your credit history. Based on this information, you can not only qualify for a house, but also be pre-approved for that house. And now knowing the definition of both, I'm here to tell you that getting a pre-approval will help you in negotiating for a home. Here's an example of why I strongly encourage my clients to get pre-approved. For example, let's say a house is on the market and it gets 2 buyer inquiries. One buyer is pre-approved to afford that house. The other buyer is just pre-qualified and shopping around. The first buyer will definitely bring more confidence to the seller that they'll be able to follow through with financing of the home because their information has been verified. To get pre-approved, there are 3 things we look at. They're called the 3 C's: capacity, cash, and credit. The first thing we're going to look at is, do you have the capacity to pay for this house? When we're looking at capacity, we're looking at 2 things. 1, what do you qualify for? 2, what can you afford? To answer this question, we look at your debt-to-income ratio. This information will help to determine what your actual capacity is to pay for a home. The next thing we're going to look at is your cash. With your bank statements, retirement accounts, investment accounts, we're looking to see if you'll have enough for a down payment and for the closing costs of your home. There are multiple loan programs that can assist with this, starting with FHA or USDA, VA, which have very little to no down payments associated with them, all the way to a conventional loan where you can put as little as 3% down, or you can go up to more percent down if you want. The third thing that we're going to look at is credit. We want to make sure that you have a good credit history. A lower credit score will make it more difficult to get approved for a loan. Good credit is important because lenders want to make sure you have reliable history of paying back your past credit obligations. So this is the first step that we recommend in the home buying journey, pre-approval. If you have any questions about this process, don't be afraid to reach out to my team. We're here to help you.